what we're going to be going over here is governmental accounting for some fixed asset construction. And this is the case here where the city or municipality is going to build a new building, for example, and we're going to have to account for that building here. And what we're going to be looking at here, we're going to be looking at the funding for the constructing this fixed asset or this building, and we'll also look at signing the contract and also partial completion here of this fixed asset that their construction, and we're going to look at it in terms of the governmental accounting that they'd have to do. So when you're talking about governmental accounting, this is where you have your governmental funds here, and then along with your governmental funds you have your accounting control groups here. And for our example here, the city is going to have to issue some bonds to finance this capital project, this fixed asset construction of this building here. And along with issuing the bonds, they're also going to have to receive some monies here from the general fund. Okay, so the funds that we're going to be looking at here is a general fund. They're going to be sending or transferring money over into the capital projects fund. This building or this fixed asset here is going to be built under their capital projects fund here. And along with our capital projects fund, we're going to have to include our accounting control groups here. We're going to be looking at the general fixed assets and also general long-term obligations. And the long-term obligations would also be the long-term debt. Okay, so let's go and look at our example here. So this is where the city is going to construct a new building here. They're estimating it's going to cost $400,000. And it's going to be financed by, first here, a transfer from the general fund of $40,000 to the capital projects fund. This is where we're going to be building this new building here under the capital projects fund. And then secondly, the city's going to issue serial bonds here, $360,000 worth of par value or face value serial bonds. They'd have a 4-year bond here. Say it's a 10% interest rate on the bond, but they're going to be issued here at a discount at $340,000. The city wanted $360,000 here for these serial bonds, their par value or their face value, but they're only going to receive $340,000 for the bond issue. Okay, so the first thing we have to do, we're going to be looking at recording the budgeted amounts here for the construction project here. So we're going to be looking at our budget here for this construction project, and that's going to concern both our general fund here because of those fund transfers to the capital projects fund, and also looking at our capital projects fund here for the budgetary entries. Now remember, when we're talking about budgets here, remember you're going to have your revenues coming in and also other sources coming in into your budget here. And then on the other side here, you're going to have your appropriations. Those are going to be what you're estimating your expenditures for the period here. And then you'd have also other uses here. So that's how your budget's set up. And then the difference between your revenues and sources here and your appropriation uses is going to give your balancing amount. So just for our example here, let's go up and look at it. Under the general fund, remember, you would have this general, your budget here for each of these funds, both the general fund and your capital project fund. You'd have these different accounts here that you're budgeting for. But just looking at our example here, where the general fund here, they're going to actually be transferring $40,000 over into the capital projects fund. So in the general fund, this would be classified as estimated other financing uses here for the budget. Again, the general fund, you would credit that here for $40,000. That's for the transfer to our capital projects fund for building this new building here. Now, looking at our capital projects fund, we're going to have setting up here our estimating other financing sources here. So we would debit that here for $400,000. And that's going to include both this $360,000 worth of bond issue here, plus what we receive from the general fund, the $40,000. So you would put under estimating other financing sources, that's the total amount that you're expecting to receive here. Okay, and then moving over to the other side here, we're going to have our appropriations control. Let's just say for the current year, we're estimating that we're going to spend $250,000 on this capital project or building the project here. So we're just looking at it on a yearly basis here, and we're just looking at the first year, the current year here. We're estimating that we're going to, so we appropriate $250,000 spend here on this new building that we're going to be building. And then we have to, and under the capital projects fund, we'd have the budgetary fund balance. Really the difference between our estimating other financing sources here, debit amount of $400,000, and our appropriations control here, or estimated expenditures for the year here, a credit amount here, $250,000. So a budgetary fund balance, we're going to have a credit here of $150,000. So our credits here, $250 plus $150, balance with our estimating other financing sources here of $400,000. Remember, the $400,000 is comprised of that $360,000 here that we're budgeting here for the serial bond issue here. And remember, we mentioned we're only going to get $340,000, but setting up your budget, we don't really know that yet here. We didn't really issue those bonds yet, so we have to put in the $360,000 plus we want $40,000 here from the general fund. So there's where we get our budgetary fund balance. Credited here for $150,000. So this $150,000 here is really what we would the current year here we're going to spend $250,000. So to finish the project, we're just estimating it's going to be $150,000, and that would be in the next year here that we're looking at. So that's simply the balancing amount. Okay, so we've taken care of recording our budget, both in our general fund here for that transfer to the capital projects fund, and our capital projects fund here for what we're estimating we're going to spend for the current year here, plus what we estimate that we're going to get from other sources. Okay, so now let's go up and let's look next here at those cash contributions here between the general fund, where the general fund sending that $40,000 to our capital projects fund. Again, we're going to record the transfer here of dollars between funds. So what we're going to set up here, as you can see here, in our general fund, we're going to have other financing uses here. We're going to use $40,000 of those dollars from our general fund here, and we're going to transfer them into our capital projects fund here. So for our general fund, we're going to have other financing uses here, and in our capital projects fund, we're going to have other financing sources here. So we're using here in the general fund, and we're going to be receiving it or using it or sending it to the capital projects fund here from the general fund, and the capital projects fund is going to be looking at other financing sources. So just remember, I've got to set up here in T account form. Remember to understand these account titles here. That's key here in governmental accounting. You have to keep your account titles going. Okay, so let's look at that transfer here. So debit cash here in our general fund for $40,000, and then credit cash here in the general fund for $40,000. Reduce our cash account by that amount, and then the debit goes to other financing uses here. Again, in the general fund, debit here for $40,000 for the transfer of that $40,000 to the capital projects fund. And then in our capital projects fund, we're going to have cash received here. Debit that here for $40,000. $40,000 going out of the general fund, $40,000 coming into the capital projects fund. And then this is where we have the debit here to cash $40,000. So the credit here is going to go to other financing sources. Again, in the capital projects fund here, credit that for $40,000. So this is what we received from the general fund. Coming out of the for this cash contributions, other financing uses here in our general fund is going to become, when the transfer is made, it's going to be other financing come in as in other financing sources here in our capital projects fund. Okay, so we've taken care of our cash contributions here between the general fund and the capital project fund for building this new building. So next we'll go look at our bond issue, signing the construction contract, and partial completion of the project. Now let's look at issuing our bonds here, and this would be under the capital projects fund. So we issue $360,000 worth of par value bonds here, but we only received $340,000 for the bond issue. So they were issued at a discount. We received $20,000 less than what we estimated we'd receive. And along with that issue, we're going to have some bond issue costs here of $15,000. So to record the proceeds from the sale of the bonds. So moving over under our capital projects fund again here in the cash account, we would debit it for $340,000, the amount we received here on the bond issue. Then moving into our other financing source account here, again in a capital projects fund, we're going to credit it here for $340,000, the amount we received here on the bond issue. So in our other financing source account here, we really, let's say we needed the $360,000 that we estimated we'd get on the bonds, but we only received $340,000. So we're going to have to make up the difference here as an other requirement here, other required source here of $20,000. So the question really is, since we issued these bonds, do we really need the $360,000? So let's assume that we actually need the extra, the total $360,000. So this is where we're going to have to set up our other required amount here of $20,000. Now, the other thing we have here in our expenditures control account here, again in our capital projects fund, we're going to record those issue costs here. Debit it for $15,000, what it costs to issue those bonds. So now we're going to have to make up the difference here. And again, for these expenditures control or expenses here, issue cost $15,000. It's not coming out of cash in this case here. Let's assume it's not coming out of cash. Therefore, we're going to need a balancing amount between our accounts here. So, and this is where we're going to use the other financing uses here in the capital projects fund. We're going to debit it for $5,000. The balancing amount between our credit here, or a debit here in cash of $340,000 plus our expenses here, debit that here of $15,000. That gives us $355,000, and a balancing with our credit here to our other financing sources here, a total of $360,000. So we can need a debit amount here in our other financing uses here of $5,000, just to balance our debits and credits. Okay. So along with this bond issue here, this is where we're going to have to we're going to have to set up our general long-term debt account group, what's going on. And this is going to be for recording the liability of the serial bonds here that we issued. So this is where we'd have the amount to be provided for the payment in the long-term debt account group here. That's the title that you'd have to use for that account here, and you debit that here for $360,000, the face value of the bond, because that's what we're going to have to pay back on that bond that's issued, the $360,000. And then moving over to our liability account here, we'd have our bonds payable for, and again identify it for that particular bond that we issued here. And in general long-term debt account group, we would credit that here for $360,000. Again, for the face value of the bond that was issued here. Now, this long-term debt account group, that accounts for the unmatured principal of the obligation of the debt. And it would have to be identified for the particular capital project fund here for that debt here, for that building that we're constructing. You have to identify it. And then remember, on this long-term debt group, as we start paying off that bond, then we'd be crediting our amount to be provided here and debiting or reducing our payable amount here. But this is only looking at the issue cost in this example. Okay, so fine. We've taken care of our bond issue here and also setting up our general long-term debt account group here for the liability on that bond. Okay, so next let's move up here. Again, in our capital projects fund, the initial, we're going to look at recording the signing of the contract to build this building and also partial completion at year end of the building. So again, remember the initial project was estimated to cost $400,000, but now we signed a contract and we signed it for $395,000. So with the contract, what it's going to cost, or what we contractually have estimated, or now to pay for this, or what it's going to cost for the building this building is $395,000 versus the initial estimate here of $400,000. Okay, so first thing we have to do is we got to set up our encumbrances here for the estimated expenditures. In this case, they're really contractual expenditures here in this case. So what we would have, when we talk about estimated expenditures, we would have put down the $400,000, but since we have a signed contract, we know what it's going to cost us. We're going to debit it, our encumbrance account here, for $395,000 for that contractual cost, and then our fund balance reserved for the encumbrances, we would credit it here for $395,000, the signed contract amount. Now remember, this contract here is going through our encumbrance control system here, and these encumbrances here is really a contra account to the unreserved fund balance. So this is what we have to set up for unreserved fund, or set up as a contra account to the unreserved fund balance, and then this fund balance is the amount that's reserved here. Okay, now we come along here at year end, and we have received invoices here. We have a partial completion of $200,000 on this $395,000 contract. They completed $200,000 worth of the work involved here, expenditures involved for it. So we would credit or reduce our encumbrances control by that amount here, $200,000, and also debit or reduce our fund balance reserved here of $200,000. This no longer has to be encumbered because we're going to pay for this or set it up as a payable. So moving it down to our payables here, we're going to credit it here for $200,000. So we received some invoices here on this contracted amount, year end here of $200,000. So credit your payables for the construction contract, $200,000, and then moving over to our expenditures here, again on your capital projects fund, debit it here for $200,000, the amount of the payable here. Okay, so now let's say we have to approve this payable here. The invoice was approved, so we would debit it out here for $200,000, remove that payable here, and then the credit at that time, or reduce our cash here for the amount paid of $200,000. So that's how we record the partial completion here at the year end here in this case. When you receive, just point it back here for your encumbrances, when you receive those invoices here, then you had a known amount here that you could remove off your encumbrances here, and also your fund balance reserve for encumbrances. Then you set them up here as your liability or payable, and then recognize it as an expense here for the invoiced amount, and then when that approval of the invoice is actually made, then you would reduce your payables by that amount, and then your cash would be paid out of your cash account. Okay, so we've taken care of signing this contract here and looking at a partial completion. Now, the other thing we have to do here when you have these fixed assets, you have to go down to your general fixed asset account group, and you're going to be recording here the partial completion of this capital project. So this is where we're going to keep a record here of this fixed asset or this building that we're building. So under your general fixed asset account group, have your account set up here, construction in progress here, and again under the fixed asset account group for that building, we would debit that here for $200,000, the amount, partial completion of the project. And then moving over, then we'd have our investment fixed asset account here, again for our general fixed asset account group, we'd credit it here for $200,000. So you have to keep track of that fixed asset or that building that we're building it here. And you do it through this general fixed asset account group. So in this case, it was a partial completion. What this general fixed asset account group is doing here, we have the detail. It keeps a detailed record of this fixed asset. So the first thing we had to do here, we have to identify the specific fixed asset, and we do that through our construction in progress. It really isn't a building yet here, it's just some construction in progress, so we have to title it construction in progress. Once it gets to be finished, then we'd move it out into the building asset account. But for our for interim, while we're making the construction, we keep it under this account here, construction in progress. And then the other thing here, well, that was identifying our specific fixed asset, again, that building. And then secondly, you have the original funding source of the fixed asset. So in this investment account investment in our fixed asset, we'd have to identify the funding source that it is here coming in on. Again, in a general fixed asset account group, we would have credited that here for $200,000. Construction in progress, debit it here for $200,000. Building isn't complete, so we call it construction in progress. And then our investment in the fixed asset, credit it here for $200,000. So we've taken care of our capital projects here fund, where we've had to set up our contract here. We had some We received an invoice for partial completion here. We set up our payables. We expensed out those. We recognized their expense here and also the cash payment. But just remember, when you're dealing with these capital projects here, you have to keep track of under the general fixed asset account group, you have to keep a detailed record of the fixed asset. Okay, so that'll summarize our topic here on this governmental accounting for a fixed asset here, where you had to issue some bonds and then also receive some cash from another fund, and then looking at just issuing the contract here and partial completion of the contract.